Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the second week. This is the first complete week of February. And this week, we have not been following a lot of economic data. There's not too much to talk about the fundamental side, but a couple of things that we are going to review. But the most important thing to really be aware is the price action and how both Nasdaq and ES futures reacted to the 5,000 milestone on the SPX cash S&P. So this week has been a lot of technical analysis. We've been moving quite fine, quite decent on the technical side, following liquidity. And the most important thing to highlight in this video, I think, is going to be that we reach everyone's milestone, everyone's liquidity, and now what? Both S&Ps and all-time highs and Nasdaq are at all-time highs again, and this is a difficult situation. So everyone's super bullish. We are super happy. Everything is going up, 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 up. Every dip is going both up and continue up, up, up. But be really careful. Be really careful. I don't want to just say to you this is going to continue higher, all-time highs without any reference to the upside, without structure, just going straight up. It's not how the market moves. So be really careful. I will try really hard for you to really understand this, because I think everyone is bullish. Everyone's super happy that everything is going up, but it's now that we have to be really careful and we have to see how the market reacts to certain gaps and inefficiencies that are key for a sustainable moving higher. If not, we might see a huge pullback at some point. So let's start with the fundamental real quick. Monday, ISM services PMI came really strong. Services, remember, is the sticky part of inflation, and we are pretty damn high. From 50, that is expansion, 50.5 previous one, we were expecting move higher, 52, and we got 53.4. So both services and composite were really strong on the 52s. The ISM services PMI is really, really strong. Also prices, look at this, 64. From 57, we were expecting a slightly decrease, but no. This is showing a strong economy. Who knows if it's really affecting inflation? But remember, I've been talking about this a lot of days and weeks. What is good for the economy right now is good for the markets, because market is in earnings mode. They want continue with the profits, with the earnings, with the growth, and they don't care about inflation until earnings season ends. And Nvidia reports earnings in a couple of weeks, and then we might worry about inflation and interest rate cuts. But right now, it's in greedy mode. So this is a tick. This is a check in the good direction. Tuesday, more Feds talking about the same thing that Jerome Powell said last week. We are not prepared to rate cuts. They continue saying that, but market continues moving higher and higher and higher. Wednesday, the 10-year note action 4.93, almost same as before. Thursday, initial jobless claims and continuing jobless claims way lower than before. 227 and 1894. We were expecting a slightly decrease, but way lower. This was expecting higher. So labor market remains strong. This is good for the economy, bad for the rates. And the 30-year bond action got higher yields on Thursday. And finally, Friday, we got the new amended core inflation rate final and inflation rate, and look at this. The core remains stable and the inflation rate 0.2. If we check the revised, this was revised from 0.1 and the inflation rate came at 0.2%. And this is huge because the government released a report saying that the last quarter of inflation, the annualized was basically flat at 3.3, but the November CPI was revised to 0.2 from 0.1, and October revised to 0.1. So revised higher. Be really careful because this inflation is still increasing, not as high as it was before, but it's continually creeping up on December, and let's see what happens in January next week, because market is focused right now in earnings. It's focused on growth, on AI, on really bullish sentiment, buy, straight up. But be really careful because now at all-time highs, with the outlook for inflation rate and inflation rate cuts, that it's not longer the same as they were thinking about. If we check the Fed probabilities, markets are still pricing in not a cut on March. On March, it's flat, so hold, and then the first interest rate cut on May. Then June and July, flat, and then a slightly decrease lower. But if we sum, we have one rate cut, 2, 3, 4, and 5 until December. 5 rate cuts, it's more than the 2 or 3 that the Fed is talking about. Markets are ahead of themselves in everything, in earnings, in interest rate cuts path. So be really careful. Greedy is taking control in this market. So now that we talk about the fundamental and how we really feel, let's talk about the milestone that the SPX, the S&P 500 index on the cash, settled above 5,000 on Friday. Look at this. Look at this huge, monumental, push with this. Look at this angle of vertical move. This is unbelievable. So on the futures, we were watching last week, I was watching this daily inverse fair value gap and the final liquidity and all-time highs. I was pretty damn confident that this was going to happen, and it happened on Friday. We took the final liquidity and we are at all-time highs right here. So expansion move to the upside to take the final liquidity. Now, let's start drawing this because I don't want you to lose track of what I will be watching next weeks. Not next week. I think in the midterm, this is going to be key. This is the daily fair value gap that we need to hold after breaking through all-time highs. This is okay. This is okay. But if we start pushing and converting this fair value gap into an inverse, oh boy, be really careful. The 1 hour, as you can see, it got the move right at the open and then continue higher. So we have a couple of, I think in the 1 hour, we don't have anything. It's just chop, grinding higher. Just, it was, the hour was driving crazy a lot of people. So we don't have a huge fair value gap. The only one that I can see on lower time frames is this one on the 30-minute. So this is going to be tracked also inside partially of that. And then obviously this liquidity here is going to be targeted. So this is my line in the sand. My line in the sand is this one on the ES. The NQ, if we go to the daily, We just took also liquidity. Let's go to the NQ current contract. There's a lot of stuff here, but I want you to check this out. So this fair value gap that we bounced off 2 weeks ago with the 50% retracement on the order blocks on the lower time frames. And now, let me just like this. We took this liquidity and we move higher. This 3 bar is the same as the Nasdaq, as the S&Ps. There's no fair value gap in here. There's just these two. And this might be an order block that we might watch a little bit. But this is the structure that you want to see break down. So the Nasdaq is quite more complex on the 30-minute chart. You can see this expansion move, accumulation throughout the week, and then on Friday, we just go straight up. I got a little bit of analysis on Friday. So the first thing I want you to see is, I think I talk about this on this divergence on Thursday into Friday's move. I only took this move, but this was the manipulation move, and the projection to 2 was taken also up here. But usually the 2.5 projection also gets tapped, and it never got tapped up here. And as you can see on Friday, during the overnight, look at this move during the overnight on Friday. Huge move. They didn't trade on Friday, but this was unbelievable bullish, right? This is London Open. Look at this. London Open, then straight up, and straight up, and then straight down. But then look at this fair value gap on the 5-minute. It was a 5-minute fair value gap, or a 15. Yeah, it was a 5. This was the 5-minute fair value gap that was holding even at market open. So really bullish into the 5,000 milestone on the S&Ps. Nvidia 3.58. Nvidia is big. Nvidia is just unbelievable. Let's just, now that we could track the Nasdaq and see what happens, just straight move up. Let's see why is this so bullish? Let's go through the individual tech stocks and see the dailies. Apple is in the middle of a huge range that I don't want to touch. Basically here at the middle. In the middle of nowhere. It bounced off this daily fair value gap down here 3 times. Quite good. I think a lot of people bought this dip at 180. Microsoft, ultra bullish. AI, look at these candles. Huge candle. Double top into a push. Look at the angle of this vertical move. This is insane. Tesla is the lagger. Tesla is the lagger, and I want to see this gap be filled before doing anything. It's just straight down with its own catalyst and in its own world. Amazon 2.71. Look at this. Huge move. This was March liquidity that got taken. We can just remove that. We are above that, and look at this grind. The next levels are these two at all-time highs also. If we check the 30-minute chart, we took the final liquidity on Friday from this move of earnings. So Amazon is holding the gap and pushing higher. Looks pretty bullish for continuation to the upside. Google 2.04 on Friday, pushing the gap down after earnings. Remember, Google on this day was 7.35 on the green. So we are approaching February again, rejection, all-time highs, and oh boy, let me just mark these all-time highs. So Nvidia 3.58. Nvidia again pushing insanely high 7.21. Remember that JP Morgan has an 800 target up here for Nvidia. This is insane. Insane. Look at the angle. Look at this. Do you know? Have you ever seen something like this? No one has ever seen something like this. This is fucking unbelievable. This is 45% in 1 month, in 35 days. From 500 to 700. Nvidia is racking up millions of dollars. And I think this is unsustainable. That's part of the reason why I think we are in a FOMO sentiment move that we are going to crash at some point. Meta holding the gap. Look at this. I was tagging all this liquidity last week saying, oh boy, after this huge move, and then we start going down, this is liquidity being created, generated liquidity for the next run up. We are consolidating here, and the most probable move for Meta is just explode to the upside. So let's see. If Meta, Nvidia, and Microsoft continue higher without any sense, but they continue higher, they will push Nasdaq to unbelievable highs. But look at those. Look at AI stocks to see when the bubble is going to explode. Be really careful, because this has a lot of similarities with the 2000 bubble. And let's see. I don't want to break your dreams. I don't want to be that guy that talks shit about the market, but this is too much. We took every single liquidity up there. And the only thing that I need to watch is just to see if we return to this level. On the Nasdaq and on the ES, it's quite clear. I already told you. We have a daily gap and we have 30-minute structure that we don't want to take. This is the level, the last level of liquidity. If we come down, we do not respect this. Let's also mark this. So this is the reason why I'm being very, very cautious. The Russell is part of the reason why we did a 2-day straight up. Look at this. Russell exploded to the upside in the last 2 days. This is broadening the rally. This is broadening the rally. This is the percentage of stocks above the 20-day moving average. Look at this move. Momentum move. Another graph. The percentage of stocks above the 50-day moving average. We were at this, at the middle of the range. We are going down or higher. If we go continue higher, we are quite strong. Look at how the market usually rotates. And now we should go lower. But at this, we can also go higher if we look for strong moves. And the percentage of stocks above the 200 moving average, it's at 60%. So there's a lot of confluence in the general, in the broad market. The breadth is quite good. But the RSP, the equal weighted ETF, the S&P, it's not that bullish. This is not looking as the Nasdaq or the S&Ps. This is just consolidating up here. It's just a bunch of stocks, Microsoft, Nvidia, Meta, Amazon, that are pushing this market on AI hype. This is just a bunch of stocks controlling the US market. If those stocks start to fall, they will just explode the rest of the market, because you cannot have a market controlled by 5 stocks. That's not a sustainable market. Dollar keeps consolidating, is quite bullish, I would say. We first leg consolidation, second leg consolidation, third leg, and it's slowly going higher. We took this liquidity up here. We have this huge green candle. If we continue and break above this medium part of the candle, if we continue, I can see dollar going to 105.8, 106, and that would be, you cannot have strong stock market with dollar strong. Yields were in the red, treasuries were in the red. Sorry, yields were in the green. That's bearish. Treasuries were in the red. That's bearish for the stock market. So it's just a couple of AI stocks. So what are you gonna do? You are gonna buy them from the top, or are you gonna think twice about patience, discipline, and risk management? For the forecast, on the S&Ps, we already covered that. On the higher time frames, I want to see this structure hold. Let's see the pullback. I want to see a pullback. I don't want to be that guy that buys up here. So the Nasdaq, on the higher time frame, it has the same things. Let's do a cleanup real quick. So throughout all the week, we've been going quite insanely high. This S&P was, was quite good. So let's remove this. The S&P liquidity was not taken. This liquidity was taken. This liquidity was taken. This was the latest all-time highs. Yeah, this was the latest all-time highs. So this is what I'm thinking about. There's still this 50-minute fair value gap with a lot of stack liquidity down here that we didn't revisit before moving this higher. So this zone is practically a really big support zone that we need to hold. But we are far away from that. Let's see if the 15-minute provides us with a little bit of structure here. We have this 15-minute. And we also have this order block. So this order block is going to be huge. I usually, for the order blocks, put the middle line, see if it's being respected. This is a huge order block. I'm only taking care of the bodies. I only care about the bodies. So the move also needs to have a retracement. So let's see where the golden pocket. Okay, so it's right above this. I would like to have pull back to this area before moving higher. I'm not going to watch this fair value gap. I don't want to see this because that's not discount below 0.5 retracement. I don't want to see that. If this fails, I don't care. I just want a pullback and see how it reacts at this level. Because if we cannot hold at discount and we continue moving lower, certainly we might also, I would also watch this as the last resort. And then we just start. This was the last liquidity before moving to all-time highs. So this line, this level, it's below this first huge bullish candle. So if we don't hold this fair value gap, nor this one, we are going to retrace to levels that I would be bearish about. So this is the structure I want to see. There's nothing to the upside, nothing, absolutely nothing. We are about 18,000. 18,000 is right here. There's nothing. We just consolidated before that and then spiked higher. There's nothing up higher. That's why it's so difficult and so tricky to really buy up here. We want to see a pullback in order for continuation. I want to see these kind of things. I want to see hold this. That will be even better. And I want to see Nvidia, Microsoft, and Meta continue showing strength. All three stocks have bullish dailies, but we are also super extended. We are leaving behind a lot of liquidity that at some point that inefficiency is going to be taken. My recommendation for next week, look at these levels. And also on the fundamental side, for next week, we have this. We have on Tuesday, we have CPI. So on Monday, we might chop or even continue higher, but be really careful if we start moving lower ahead of Tuesday. The expectations are flat on the core month over month, a little bit of tick higher on the year over year on the core side, but on the general inflation, it's flat and the higher, and lower. The expectation is lower. So this is going to be key Tuesday. And then the rest of the week is just retail sales on Thursday. And Friday, we have PPI and all that stuff and consumer sentiment. So until Tuesday, no news Monday on the 12th and CPI on Tuesday. So until then, we really need to wait and see. I don't want to buy up here. I want to see a pullback and then buyers stepping into that key level for continuation ahead of good news. Who knows? But I need to see structure being held, bullish structure above all-time highs, and also on the fundamental side, I need to see Tuesday. I don't want to predict a good CPI because anything can happen at all-time highs at these levels. People might just want to sell everything. Who knows? That's the tricky part. And that's what I really like you to understand, that these kind of moves are awesome, are too technical, but at some point you have to really detach from this bullish sentiment and think by yourself, is this sustainable? Is this sustainable? Is this sustainable, Nvidia? Is this sustainable, Microsoft? That's the thing I want you to think about. So this is my structure for Monday. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos like this on Saturdays for the weekly recaps. They are very interesting. So I hope those are helpful for reviewing your week and also be prepared for next week. That's the edge that you have for the market. That's the edge: analysis, studying. You have all the weekend to review and prepare for next week. That's how you need to trade, being prepared, and more than that, discipline, patience, risk management. Those are key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.